I'm back, YouTube. Hey, this is Larry with Invest and Build Your Credit and Wealth. Hey, we have an exciting class today. We're going to be putting these three industries together because they are linked. It is called the roadmap to the EV market and how you can increase, 10x your money by combining the industries all because they are all linked. Nobody's talking about that. They're just talking about one particular stock, but one thing is linked to something else. So how do you tap into all the markets? Hey, this class is on that, tapping into the whole EV market. And I'm going to have a a very special, stay to the end because I have an industry nobody's talking about that's got massive gains, and I got some information that the government has done to increase this market that nobody's talking about. So definitely stay to the end, but we're going to be talking about EV cars. We're going to be talking about the EV charging infrastructure, and we're going to be talking about lithium stocks. And then I got a special one at the very end. Then at the very end, I'm going to go over my portfolio that I started in May. I thought it was the last week of April, but I went through and looked through all my accounts. Actually, it was on the 8th, the 8th of May that I started with this $100 and continued to invest my money. And I'm going to show you where I'm at today and what percentage of gains I've had over the 6 months. So, hey, stay tuned. You're going to be surprised what research can do for you. Right. So, again, let me put the disclaimer out. I am not a financial advisor. I am not licensed to be a financial advisor. This information is just my information that I'm sharing with you on what I'm doing with my portfolio, how I'm growing my wealth week after week after week after week. People are surprised how much I've done in a short period of time. So I just want to show you, share that with me. So let's get into this class. Oh, let me back it up. I want to say thank you for all my new subscribers that are coming to the channel. Please smash that like button. I want to get like 1,000 likes. I just want a whole bunch of likes. Just help me out. I just want to bring you more information. I definitely need to get more videos out to you. And I am committed to getting these videos out to you because I want to share this information to you. And I want you to come along with me on this growth potential, growing our wealth. I have a Facebook group too called Invest to a Million, Investing to a Million stock group. You can come and join it. A bunch of us just talk about stocks, all free. You don't have to pay. You don't have to join a group. You don't have to do none of that. A bunch of us talk about stocks. We share stock ideas, what we're doing. Then it's been a great adventure, and that Facebook page is definitely have been growing. So please come out and be in the description if you want to join it and just come out and hang out with us. But hey, let's get into this class because I got it condensed because I want to get you in and out because I want you to be the first to the party. So first, let's just talk about the market, right? So historically, the investment gains come from anticipating new emerging industries. The EV market is a new emerging industry and investing in this eventual winners in those new industries. So that's the point. I'm trying to bring you, based on me and my research, what I'm doing, I'm trying to get into the companies that are going to be winners on this new EV industry. It's the same as Amazon, Google, Facebook. When they were new emerging industries, their stocks was literally nothing. And if you would have invested in those stocks when they first came out, you've been a millionaire today. It's just that simple. If you would have invested your money into that company when it first came out, you'd have been a millionaire today. So now this is a new emerging market. Are you going to be early to the party? Or are you going to come late? That's what we're talking about. I'm going to be early to the party. So, but I want to share this information to you. So the electric vehicles potentially created a new emerging industry. Hundreds of new EV models are forecast to increase in 2021 and reach 8 to 10 million by 2025. So, hey, that's what you want to be a part. This is a growing industry. You got government that's going to be giving credits back for you buying EV cars. The state of California is saying by 2025, they will no longer be selling ICE cars, which is gas cars. You're going to have to buy an EV car if you want to buy a new car in the state of California after 2035. So this market is going to grow, and other states are going to follow. I promise you they are. So are you going to be early to the party? Or are you going to be late to the party? So we're going to cover some U.S. companies I think are great companies. Just cover some key points on them. We're going to talk about their evaluation, what their stock price is. My job is to just pass this information and for you to do some research and see, is this going to be a great investment for you? The first one we're going to talk about is General Motors, ticker GM. Now, GM is committed to 20 new vehicles by 2023, including EVs, across from Chevrolets, Cadillac, GMC, and Buick. All the GM is planning on putting electric vehicles across all those different car makers. So it's not just GM doing Chevrolet, Cadillac, GMC. Everybody's going to do them. There's going to be trucks. There's going to be SUVs. Understand, this stuff is coming out. In the recent announcement that is already sold out of its first year production of the Hummer electric pickup. So they've already sold out of that. So that's already letting you know that they're already progressing in this EV market. By mid-decade, it's expected to sell 1 million EVs per year in its two largest markets, North America and China. As reference points, Tesla reported deliveries of 367,500 vehicles globally in 2019. So that just lets you know that they are aggressively trying to catch up with Tesla, and they are going to reach all aspects of all their markets to do that. Now, the current sale price of GM is $37.47. They have a market cap of $53 billion. They have annual sales of $137 million. They have a cash flow per share of $15.74 per million, and their earnings per share is $4.82. So GM, look at GM. Look, they are a growing company. Look at what their projections to do. And I promise you, this stock is, if this is one of the U.S. stocks, I think automakers that's going to really do well, it is GM. I believe GM is going to do well. Make sure, don't sleep on this stock. The next one we're going to talk about is Lloydstown Motors, ticker symbol RIDE. What about Lloydstown Motors? Lloydstown Motors Endurance will be the full-size electric pickup trucks designed to serve the U.S. commercial fleet market, with initial productions expected in the second half of 2021. Right around the corner. This is November 2021. It's right around the corner. You're going to see massive things change and things growing in this 2021. Lloydstown claimed that the Endurance has secured $1.4 billion of pre-orders. The company licensed technology from Workhorse is returned for royalties and a 10% ownership. So Lloydstown and Workhorse working together, basically. It forecasts selling 65,000 vehicles in 2023 and 107,000 in 2024. These estimates could be a large percentage of the EV pickup market, right? So GM announced that it was closing the plant because we wonder where they're going to be producing these vehicles. GM announced that they were closing the plant and was under a great deal of pressure for that decision. So GM sold the plant to a company that was named Lloydstown Motors for an estimated $20 million for the loan to the acquiring company. Subsequently, the sale was redefined to be part of a $75 million investment by GM, of which $50 million, which was in-kind exchange for the plant. So Lloydstown financial projections appear to be aggressive. They are aggressive. It projects to start shipping its trucks in late 2021 and get 1.7 billion in revenues in 2022, increasing to 5.8 billion by 2024. All right, aggressive and growing. They put large numbers out there. Current price value is $17.89 a share. Market value is 500 million. Net income 3.2 million. PE ratio is really high at 340.31. Cash flow is 9 cents per share. Book value is 18 cents per share. And they're looking at a projection, a 1-year projection of $50 per share. Right now, that's a massive growth. 1789, and maybe by the end of 2021, this stock could be $50 a share. At least $50 a share. So again, are you coming early to the party? Or are you coming late? Another one that nobody's really talking about, XL Fleet, ticker symbol PIC. XL Fleet is a 10-year-old company it was going public through a SPAC. Pivotal XL in it's a little different company. It provides fleets electrification modification for ICE trucks. It has over 200 of the largest commercial and municipal fleets, with more than 3,200 XL systems deployed and over 130 million miles driven by customers to date. XL customers bases are FedEx, Coca-Cola, PepsiCo, Verizon, the City of Boston, Seattle Fire Department, Yale University, Harvard University. XL expects 21 million in revenues this year, but forecasts a 1.3 billion in revenues by 2024. In its investor presentation, they put this out in the investor presentation. It plans to do this by expanding its product line from hybrid to plug-in hybrids to fully electric, crosses a broad range of trucks. It claims to have 220 million pipeline for the next 12 months. $220 in money for the next 12 months. Current share price is $10.09 a share. Market value is 290 million, with a cash flow of $4 cents per share, and a book value of 17 cents per share. The next company, a lot of people talk about it, been blowing up, Helion, ticker symbol HYLN. Helion's strategy is unique. It is very different strategy, especially it generates electrical onboard trucks using compression natural gas, CNG. This should be a benefit for long-range trucking. Helion Hypertruck concept involves an all-electric drivetrain utilizing a Dana electric motor, inverter, and a axle technology. The truck batteries are fueled by an onboard tank of a CNG, again, which is compressed natural gas, with some 700 stations already operating nationwide, and delivers that there are no need to build an expensive supercharger or hydrogen infrastructure, right? The combination with Helion and estimated market cap is about 1.5 billion, with approximately 530 million going to the company, including 325 million fully committed back to the company. Helion projects 2 billion in revenues by 2024, which claims that only about 2% of the addressable market. Ooh, that's a lot, and only hitting 2% of the addressable market. Market cap is 526 million. Net income is 2.32 million. Cash flow is 11 cents per share. Book value is 21 cents per share. And the stock right now is sharing at $22.58. Hey, listen, earning calls for Helion is on the 12th, which on the 12th of 2020. So that's Wednesday of next week. Today is Sunday, so like Wednesday of next week. So it's a big, next week is, well, this week, because the day is Sunday, this week is going to be a big thing for Helion. Now, let's get into the next. That is the U.S. market for EVs that I'm going to be investing in. All of these companies, I believe in these companies. I believe that their model is going to be a great investment, long-term investment for me. So now we're going to skip out the U.S. We're going to travel over to China and some of the companies I'm investing in China in this EV market. The first one we're going to talk about is Li Auto. It was founded in 2015, went public on July the 30th. It is a Beijing-based company, vehicle startup that plans to vertically integrate manufacturing. It designs research, manufacturing, sales, and offers services featuring in new models of electric vehicles. They're a little different in how they do their vehicles. People are not talking about. But let's talk about what are their vehicles. Are they fully electric? So this is how they're doing their vehicles. They're using electric motors, one on the front axle and one on the rear axle. But these motors are powered by a combination of a 40.5 kilowatt battery pack and a 1.2 liter turbocharged engine paired to the 45 liter tank and a 100 kilowatt electric generator, which generates power from the battery pack in real time. The idea is that the car can drive about 100 miles on a battery powered alone, but it has a total range of 500 miles when leveraging the combustion engine generator. Now, Li Auto is looking to sell a variety of these SUV built on a hybrid technology. The range from around $21,000 to $70,000. It is a mid-size SUV that well pointed and has lots of touchscreens and technology. A full-size premium version is planned to be released in 2022. Li has $1.1 billion in its initial price, with it $15.50 per share, but quickly reached $24. It is currently valued at approximately $22 billion at a price of approximately $26 per share. It has a market cap of $22 billion and a share price of $26.46. The next company I'm looking to invest in, XPeng. Let's talk about XPeng. XPeng aims its EV and technology for middle class Chinese customers with a price range of $22,000 to $45,000 after government subsidies. In some ways, it is a Tesla knockoff at much lower price. XPeng starts production of the G3 in November 2018. And as of July 31, 2020, delivered 18,741 vehicles. It started production of its P7 and began delivering these in May of 2020. And as of July the 31st, 2020, has delivered 1,966 EVs. The P7 has a range of more than 400 miles. It plans to launch a third smart EV, a sedan, in 2021. The G3 has among the top 3 best-selling electrical SUVs in China in 2019. Now, this is where it really gets good with XPeng, which kind of separates them a little bit. XPeng claims to be developing an autonomous driving capability for its EVs. The P7 is the first production vehicle to feature the NVIDIA Drive AGX Xavier system on a chip. The SoC autonomous driving platform. So that's another company, but we ain't gonna talk about that. But that's another company I am currently investing in. NVIDIA for the X-Pilot, and Qualcomm Snapdragon. It's the 820A for intelligence service and information. Include cameras inside and outside radars, HD maps, ultrasonic sensors. Like Tesla, it claims it can create sufficiently autonomous driving without LiDAR. Okay, the stock opened on August the 27th at a price of $15 and a variation of 11 billion, but its stock jumped more than 40% shortly after. The market cap is 25 billion. The share price right now for XP is $34.81. It's up there with NEO. But let's talk. Y'all been waiting on this. Next one is NEO. Ticker symbol NIO. Unlike previous companies, NEO has been a public company for some time. Originally went public in the U.S. back in September 2018. Selling IPOs shares at $6.26 and raising about $1 billion. NEO Design jointly manufacture and sell smart and connected premium electric vehicles, attempting to develop the next generation of technologies in connectivity, autonomous driving, artificial intelligence. Joint manufacture means that it used a state-owned contract manufacturer to build its cars. NEO received an investment of $1 billion from investors, including state-backed entities. The vehicle's deliveries hit 3,740 in June, top 10,000 for the second quarter overall. NEO currently trades at $40 per share, including a big jump recently, for a valuation of $56 billion, and have revenues of $2.3 billion in 2019 with a loss of $3.8 billion in 2019. It delivers 21,667 vehicles through August of 2020. Again, the market cap is $56 billion, and the share price right now is about $41.63. Now let's move in. What is the next industry that we want to talk about? It's the EV charging infrastructure. So it's so big. So you got EV cars, but for the electric car to work, they're going to need batteries. So are we investing in batteries also? Because as the EV market grows, the demand for batteries is going to grow also. So are you investing in these companies? And let's talk about some of the companies I'm thinking about investing in. EV batteries. That's the next topic. A related investment strategy in investing in battery technology. There are several alternatives for this, including battery manufacturing, new battery technology, battery management, and the materials that go into a battery. Most EV batteries are made by very large diversified companies, so they aren't covered here. China, and with CATL, is one of the largest battery manufacturers in the world with approximately 7.5 billion in revenues. And that just lets you know where China's at, with these batteries. So first stock we're going to talk about, QuantumScape, ticker symbol SKAC. QuantumScape is a new battery technology company. It is trying to drive the innovation curve for the next cutting edge batteries with massive market adaptation. Even Bill Gates is backing this EV battery supplier. Is developing the next generation of battery utilizing lithium metals, which has a significantly higher energy density than lithium ion. So leveraging lithium metal technology, the company hopes to achieve a range of 300 miles or more, a hypercharging of less than 15 minutes, and cheap vehicle less than 30K, an extended battery life more than 150,000 miles. So QuantumScape sees the entire innovation industry as its total addressable market with more than 450 billion in potential battery demands. Yet there are enormous amounts of uncertainty surrounding this next generation battery enterprise, considering it is still in the product development stage, yet investors are optimistic about this business future. QuantumScape and Volkswagen have announced a joint venture to enable industry-level production of a solid-state battery for use in their Volkswagen vehicles. So it's still a SPAC now. When this company merged, the ticker symbol will be QS. Market cap 406 million. Share price right now is $14.15. And yes, I am investing in this company. The next one we're going to talk about, Romeo Power, ticker symbol RMG. Romeo Power is coming public through a SPAC also, right? It is a player in the EV battery, focusing on commercial vehicles similar to Workhorse, Nikola, and Helion. But Romeo isn't making battery sales. Instead, it's focusing on battery packs, construction of battery management systems, or BMIs, the software or hardware that determines critical factors such as EV range, battery life, and battery reliability. Borg Warner BWA is a strategist, investor, and customer of Roman and its battery solution. The two have a 40-60 joint venture to combine Romeo technology with Borg Warner's manufacturing and supply chain capability and its established relationship with car and truck makers around the globe. Romeo estimates the joint venture could produce 708 million by 2025. It also forecasts 1.65 billion in sales of its own that year, which would be a big increase from the 11 million forecast from 2020. Romeo said it has 300 million in contract revenues and additional 2.4 billion under discussions with potential customers. The merged transaction resulted in a quality value of an estimated 1.3 billion. The stock trade at a little over $10 per share. Market cap 209 million. Share price $10.11 per share. Net income 2.09 million. Cash flow 7 cents per share, and book value 17 cents per share. Now, what is the next market? That was the infrastructure. Now, in batteries. Now we're going to talk about what's going to also happening to get in these batteries. We're going to talk about lithium stock. So another investment revenue is to invest in the critical materials, especially lithium that goes into the EV batteries. EV manufacturers are focusing on lithium after dealing with changing with cobalt and nickel. Also used in batteries. Price of lithium are critical and have fallen of late. It means the gut focusing companies to pull back on production. So expecting growth in electric vehicles. So it's kind of pulling back, but as we ramp up this electric vehicle, this to really start producing and mining for lithium is gonna become more and more. So let's talk about potential stocks that may be good stock investments for long term dealing with lithium as this EV market continues to grow. Livent Corp, which is ticker symbol LTHM, is a lithium technology company which operates assets around the world, extracts its premium lithium in Argentina. Lithium begins trading at a public company on the New York Stock Exchange back in October the 11th, 2018. It has a market cap of 2 billion and has 388 million in revenues in 2019. Some things you want to Listed stock, Lithium stock has traded at $7.47 in March of 2020 when COVID-19 reached pandemic status, according to the World Health. Since then, ticker symbol LTHM stock has increased by 82.7%. It's now trading at $13.65. So that's one of the investments that you may want to look at. You may want to, am I going to invest in it long term? Yes. Market cap is $2 billion. We talked about shares price is $13.65 with a PE ratio of 19.5 cents. So that is another company you may want to look at. They announced its early quarter earning results on Thursday, November the 5th. The company reported a 5 cents earning per share for the quarter, missing analysis consensus estimates of 0.01 by 0.06. So they missed it. The company had revenues of $72.60 million for the first quarter, compared to analysts estimated of $66.78 million. Lithium had a return of 5.8% and a net margin of 0.7%. The quarterly revenues was down 27.7% compared to the same quarter last year. During the same period in its previous year, the company posted 12% earnings per share. Next company we're going to talk about is Piedmont Lithium. It is an Australia company. It is an emerging lithium chemical company focused on developing in its Piedmont Lithium project in North Carolina, and the goal of becoming a strategic domestic supplier of all battery-grade lithium and other chemicals in a growing electric vehicle and battery storage market in the U.S. Let's talk about the key points. Lithium stocks was trading at $6.39 March the 11th, 2020, when the coronavirus reached its pandemic level, according to the health organization. Since then, ticker symbol PLL stock has increased 252% and is trading at $22.51. One brokerage has issued a one-year price objective for Piedmont Lithium stock for forecasts that it's going to reach $41. That's the forecast. This suggests that a possible upside of 82% from the next current price. The market cap on ticker symbol PLL is 186 million, with a share price of $22.51. Last one we're going to talk about on this market is Albemarle, ticker symbol ALB. Albemarle isn't just a lithium stock. Its primary sell other products used in flames, retardants, and catalysts using by refineries. It has a market cap of approximately $10 billion on revenues of $3.6 billion. Now, Albemarle stocks was trading at $70 in March 11, 2020, when the coronavirus hit. Since then, Albemarle stock has increased $60.2%, and now it's trading as $112.22. Albemarle announced its earnings result on Monday, November the 9th. So coming up tomorrow, it's doing its new estimates. Pay attention to the call. Per share, the quarter beating analyst consensus estimates of 78 cents by 31 cents. Especially chemical companies had revenues of 746 million for the quarter compared to analyst expectations of 734 million. Albemarle has a net margin of 11.77% and a return of 12.11%. Albemarle Albemarle revenues for the quarter was down 15.1 compared to the same quarter last year. During the same period last year, the business posted 1.53 earnings per share. Now, let's talk about the bonus stock. Let's talk about what we should be definitely looking at and what the government is doing to prop up this. And it's called rare earth minerals. People are not talking about this. But on October the 5th, 2020, the United States government announced it would direct a $60 billion U.S. International Development Finance Corporation, a federally funded lender and investor created under President Trump, to invest $25 million in the UK-based mining group that specializes in producing rare earth minerals. The investment in TechMet Ltd. Will go toward developing a mine in Brazil and producing nickel and cobalt, both essential for the manufacturing of electric vehicles, mobile phones, and batteries. Announcement follows the executive order issued by President Trump last week by addressing the threat to the domestic supply chain from a reliance of critical materials from foreign adversaries in it. He declares a national emergency and state our nation's undue reliance on critical minerals in process or unprocessed from foreign adversary constitutes an unusual and an extraordinary threat. The Trump administration has recognized the threat to America economics and military security and domestic manufacturing of other industries and its ability to respond to climate changes through the development of clean and renewable power since Executive Order 1387, a federally strategy to ensure a secure and reliable supply of critical materials, which issued in 2017. However, the TechMet investment represents the first tangible action to address this threat. The U.S. government previously acknowledged there is 35 minerals essential to the economic and national security of the United States and have supply chain vulnerability and disruption, including disruption. So for 31 of these minerals, the country is reliant on foreign producers for between 50 or 100% of its annual need. Wow. So that just lets you know rare earth minerals, a lot of people are not talking about, but this is a driving market just for our national security, for all the things we do to change into a green energy country, right? So we're going to talk about two stocks, and then we're going to be wrapping it up. And then we're going to get you out of here because I know you got things to do, but I just want to give you some good information on some stocks. The first one we're going to talk about is Northern Destiny Minerals, NAK, right? Northern Destiny Materials engaged in the exploration and mining and properties in the United States. Its principal mining properties of pebble, copper, gold projects comprising 2,402 mineral claims that cover an area approximately of 417 square miles located in southwest Alaska. So 3 brokers have issued 12 more target prices on Northern Destiny Materials shares. Their forecast from $2.25 to $3.50. On average, they expect Northern Dash shares to reach $3 in the next 12 months. That suggests a possible upside of 289.5% the stock current price. The stock current price right now is 77 cents per share. 77 cents per share. Am I going to invest? Yes, definitely. I'm going to take a chance and invest in this stock long term and see the growth potential that it has. The next one we're going to talk about is Fortress of Value Acquisition, FVAC, and the company they're going under this SPAC is MP Materials. MP Materials is owned and operated of the Mountain Pass Rare Earth Mineral and Processing Facility, the only integrated site of its kind in the Western Hemisphere. With over 270 employees, MP Mineral produces approximately 15% of the global rare earth minerals essential for development technology such as defense systems, smartphones, drones, electric vehicles. It operates a green mining and processing facility and is currently one of the lowest cost producers of rare earth mineral concentration. The MP plays a leadership role in advocating for a more robust and competitive rare earth industry in the U.S. So if you want to check it out, you can. I'll put the website in the description. The market cap for this company is $508 million with a share price of $11.79. The last one we're going to talk about, and then we're going to wrap it up, is Rio Tinto Group stock. It's called ticker symbol RIO. The Rio engages in finding minerals and processing mineral resource worldwide. The company offers aluminum, silver, copper, diamonds, gold, titanium, salt, and uranium. The group was founded in 1873 and has a headquarters in London in the United Kingdom. Market cap is $75 billion. Share price is $60.83 with a cash flow of $11.90 per share, with a price cash flow of $5.11 per share and a book value of 35.57 cents per share. All right, the last one we're going to talk about is Rio Ten Time Group stock, ticker symbol RIO. Rio Ten Time Group engages in finding minerals and processing mineral resources worldwide. The company offers aluminum, silver, copper, diamond, gold, titanium, salt, and uranium. The company was founded back in 1873. It has a market cap of $75 billion. Share price is $60.83 with a cash flow of $11.90 per share, with a price to cash flow of $5.11 and a book value of $35.57 per share. Ticker symbol RIO pays out of dividends. They paid out a dividends of $1.55 per share on Thursday, September the 17th. Represents a dividend yield of 6.3%. The ex-dividend date of this dividend is Thursday, August the 6th. Rio Tinto Group has a market cap of $75 billion and generates 43.17 billion in revenue each year. The mining company earns 8.01 billion in net income profit each year, or $6.33 on the earnings per share basis. Rio Tinto Group employs 46,000 workers across the globe. That is my class of the different markets I believe that all of us should be tapping into with this EV market. So please do your due diligence, invest in the companies we're talking about, and do what we have to do to grow our wealth. So down to the bottom, let's get into my portfolio. I want to tell you it'll be up here. So for the month, I am up 15%. On 3 months, I am up 28.78%. Now, mind you, through all these dips in reds, I'm still majorly up. And for 6 months, I am up 59.7%, as y'all can see. So, hey, please hang out with me. All these classes won't be this long, but I thought this class, everything needed to be condensed to kind of link everything together. But I do have some other stocks that I'm doing my research on for y'all right now, so y'all will be able to stay tuned. This is Larry with Invest and Build Your Credit Rep. Please smash the like button. Please subscribe to the channel, and please follow me on this journey of financial freedom. Thank you very much, and I'll see you next time.